call me down in Mexico.
They always give them nicknames like Chapito or some shit.
No. So like my girlfriend's family, she calls me. They can't pronounce like the L really in my name. It's like Kyle. I'm like, what? Or it's Carlito.
There you go. That's what I was looking for.
I'm like, no, it's not that. But hey.
I knew they had something like that.
Carlito. And I'm like, no, it's Kyle. It's Kyle. All right, welcome to Insider Trader's Mind. I'm your host, Kyle Doherty. Carlito Doherty.
Carlito
and
Doherty.
I am here with Sammy Tobar.
Cheers, just Sammy.
Kyle's the Sammy traveler from Miami.
He's got nicknames all over the world. So,
Sammy, you got tons of nicknames, dude.
I know, right?
Yeah. But all right, today we are going to talk about a trading checklist. Today we are going to share trading secrets. Wow. Our trade secrets with you.
My precious.
Yeah, we're going to share our trading checklist with you. And we're going to go over the data points we use to make the decision if we're going to take this trade or not. So I am pretty excited about this.
Before you share that checklist on your screen, I want to just kick in a few thoughts on a checklist. If you are trading and you don't follow a checklist, what are you doing, right? You follow rules of some sort. The problem is when you're trying to trade at 3 o'clock in the morning and you're going like this, or your 5 a.m. wake up club, or whatever the deal is. Many times living in the US, if you're watching this in the US, we don't have the most opportune times to trade London and New York, especially on the West Coast. So having a checklist is a nice framework for you to follow. The second part is your checklist should basically be your trading plan, right? You have to have a plan when you trade. And if you don't have a plan when you trade, it's lights out for you. You're going to get lucky sometimes. Hopefully it's a higher percentage of the times you're not lucky. The third part of this is if you use a checklist and you behave consistently, you can fix the things that are broken, right? But if you're all over the place, one day you follow a checklist, the next day you tweak the checklist and don't follow it or tinker with an element in the checklist, you will never have a foundation to improve upon. Right.
Man, so that's how you start. That's how you start fucking up. If you start to mess with the checklist that you already know works, that's when you start making mistakes. I've done this more times than I can count.
When you started, you would crack me up. You'd be like, I made $4,000 today. 2 days later, you'd be like, oh man, I had a bad day. And I'm like, what happened?
I just lost $10,000 today.
Checklist. I just fucking took 5 trades with didn't even qualify them, And I'm like, I thought I knew that was gonna. No, dude.
This is where the discipline I think comes in, and how important it is, and I think how important it is to stay on the demo until you have properly disciplined yourself.
Prove it.
Use it. Right. Yes, exactly. Prove it. Not only just prove, you got to prove it to yourself. I mean, trading is a lonely game, but you got to prove that you can follow this list without deviating from it, without changing a single thing on it, because you'll make mistakes like me where you just, you get into this losing streak, this losing mode, and then you just start throwing everything out the window, and then you start just clicking the button because you're like, now you're in scarcity mode. Now you're like, oh fuck, I'm losing all this money. I'm just going to start clicking the button. Hopefully you get it right. And luck is not on your side when you like that.
And the other part about it is typically when people get into a losing mode, every time I've dug in, that's why I always ask people, if you're struggling, send me a write-up of your charts, because when you send me a write-up, I can see what part of the checklist you're missing, right? If you're missing, so many people jump the gun. They want to get the breakout. And I'm like, you can't get the breakout. It's a 50-50 trade, right? If there's a pattern forming, you've got to wait for we'll get into it, the shift bar to form. Otherwise, it's going to chop, or it's going to keep going long or short against you. And you miss one element on the checklist, right? It's all data driven, but it's all proven data. You're going to toast. Without further ado, I'll let you pop that checklist up.
We're going to share the checklist. So guys, again, for those watching on YouTube, you will get the full benefit of this bad boy. And if you are listening on Spotify or any other one of the platforms where you can listen to podcasts, I suggest because we're going to go over this, I suggest stop driving, pull over, get a pen and paper, and write this down, because this is going to be important. Cool. So first step before anything is your analysis bias.
Yeah.
Your analysis bias is great to know. You have to know, you have to identify this. You have to know, because we use multiple time frame analysis all the time. So I think we've talked about it many different times. I'm pretty sure in the last episode, we also talked about it. And I think we're going to go into depth in the future about multiple time frame analysis.
Totally.
But starting out, we want to identify, is our bias long, short? Are we in a range, or is it chopping on the 4-hour charts? We want to see on the higher time frames what we're doing here. Where it's going. Like, where are we going in the long term?
We always talk about framework in our program, right? Mm-hmm. There's guesswork, there's hard work, and there's framework. Okay. Frame. The market's going long, the market's going short, the market's chopping, or there's compression in the market with a clear high and a clear low that makes a range.
Clear low.
Yeah, that's your four frames. That's it. Start there, right? If you start with 4 frames, now I can make money going long, I can make money going short, I can make money off the top or the bottom of a range, but I can't make money while we get chopped. So
exactly.
Boom, that's it. This checklist, let me just also expound a little. This checklist is broke down into 3 critical components, okay? The first part is a fundamental component. So you understand if we're longing or shorting in a market, or if it's a range or chop. That's fundamental. If you get into the fundamental that, all the pound pairs are going long, or all the pound pairs are going short, you understand what you're working with now on the fundamental side. The second part, as you work your way through the checklist, is at the technical side, right? Everybody talks about, there's, fundamental analysis and technical analysis. This checklist has both. Now, the third part, as you scroll through, we'll get to, and I'm just kind of framing this for discussion, is trade management. Trade management is all about psychology, okay? It's, can you follow these rules to get in a trade and out of a trade to maximize your profit, okay? So we have fundamental, technical, and psychological analysis on your checklist, right? Mm-hmm. Now, like I said, this is your trading plan. If you don't have the data in this plan to support entering a trade, and more importantly, do you understand each line on here and master it so you can just look at it and quickly know this is the condition, this is the condition, create that context to work with, because you're probably going to create that context over a series of pairs, and you're going to pick the best one with the highest probability of success. Mm-hmm. I divert back to you, Kyle. Sorry.
All right. That's perfect. I'm glad you actually framed it out for everyone. They should hear that. Another really important thing is, before you even start this, speaking of fundamentals, please check forexfactory.com for news every day.
Yeah.
Okay. Totally. This is critical because you want to know if there's any high impact news, which comes in a red square, or it's like a red envelope or something like that next to the pair.
Yeah.
That's very important to know, and it will give you the time and the date this is happening. This is going to be one of the factors that you're going to use most of the time to find your identifying candle or your confirmation candle to get in and out of the trade.
Right.
So moving on. So we want to check the biases, 4-hour, 1 hour, and 15-minute chart. We want to identify, are we going long, short? Are we in a range, or is it chopping? If it's chopping, take the day off. All right.
Oh,
take the day off.
Find a new pair.
Find a new pair. There's plenty of them out there. All right. Now, is your trade against the bias, or above the time frame above, or is it against, or no? Are we going, are we trading trend? Yeah. Are we trading into the moving averages in simple terms, or away from the moving averages?
Right.
So I think that's a good way a simple term to put it. So, okay. Step 2, analyze setup and pattern. Okay. Identify the setup. Now we look for something that, if you guys do book a strategy session with me, or you do end up doing some coaching with me in the future, you'll know what burst 1 means. but for intents and purposes, basically burst one is your breakout. Does it have a swing high and a swing low? What kind of setup are we looking for? Is there a pattern? What time frame does the pattern happen on? 4 hour, 1 hour, a 15-minute chart.
Totally. And you know what? Also, there's a fundamental thing in trading where 4 hour moves are gigantic, right? When they start running a trend, you trade hour and 4 hour charts.
Oh yeah.
You've nailed 1,000 pip moves. So you get
easily.
That.
Yeah.
I trade 15 charts because I'm really impatient and I don't like a ton of risk, but I just follow my plan, right?
Yeah, nothing wrong with that.
I know what I'm going for every day. Like if I lock in 25 pips or 50 pips, 3 times, 4 times a week, that's my goal. But when you're like I know what to expect out of those charts and those time frames.
Exactly.
That's where I'm swinging, and that's just my, like I say, you either have high risk and patience tolerance, medium, maybe the hour chart. Me, I'm just not a patient human. That's the idea of freedom to me in Forex is I don't want to sit here in front of these charts more than we said a couple weeks ago, I might have 15 hours a week into this business, right? If you're sitting here 80 hours a week, what do you do? That's not.
Yeah. Are you even really,
right.
Are you enjoying the benefits of the freedom if you're sitting 80 hours a week? That's no. So I like to trade the higher time frames so I don't like to sit in front of the charts because at this point, right, I do my analysis. I spend the 10 to 15 hours a week doing the analysis. And then I'm like, okay, bam, bam, bam. Here's on the 4 hour chart or the 1 hour chart. I know I can let this run for 1 or 2 days. I enter the trade and I'm confident enough that it's just going to go. Yep. And 95% of the time, it just goes.
And we have some advanced trade tools that you use.
Yes, we do. Yeah, we use some crazy advanced stuff, but you actually don't need all of that.
You can do it in MT4.
Yeah, totally. So, so your pattern, that's a good thing to bring up too. Is you want to figure out what type of trader you are going to be, like what kind of trader you want to be. So that's pretty important. So identify the setup. Is price on your moving averages, the 50 to 200 moving averages. So we call them ocean or clouds. It's easier way to remember than numbers, I feel like. But is your price on the 50 moving average or the 200 moving average, or is it not? So that's a good way to do it. Identify your pattern. Are we looking at a single top, single bottom, double top, double bottom?
That's it. Two patterns.
Two patterns. That's it.
One's upside down and the other one's right side up.
Yeah. Right? Exactly.
Nothing more. Like complexity is the enemy of execution. It's two patterns. Master two patterns. We don't need all this flags and all this other crap, man. Just if you got a double top, you got a single bottom or whatever. Those are the two most popular patterns. They've been taught for decades. Guys, before there was even charting software, and you would
these patterns been showing up
graph paper, man. That was the first course I learned was how to draw price action on graph paper on daily charts.
That's wild, man. Really?
Horrible.
Holy shit.
God, it's the worst.
Yeah, that's crazy. And you know what? It's funny because those 4 patterns out there have always been there, and they're just so simple. Why not use these patterns? I'm sure if you're a seasoned trader, you probably heard of them. And hopefully you got a good strategy, but if you're writing down this checklist here, this is going to help you kind of identify those patterns and the way they're moving, and how we get into the trades a little bit better. So we use CCI candles to establish, a pattern in volatility and acceleration in the price. You actually don't need those if you have the TDI or the Traders Dynamic Index.
Or even the CCI indicator. It's just I don't like a lot of crap on my charts. So
exactly. I like the multicolored candles because it looks fun. So
and momentum, volatility, and order flow is what this is all about because we don't have access to real volume. Forex is decentralized.
There's no actual volume in the market. It's so weird that there's a volume indicator. But anyway, Fibonacci retracement. We use the Fibonacci retracement. Some traders might come across and say, oh, Fibonacci's retracement is just like a self-fulfilling prophecy. But most of the time, it's good to check the levels in where we are. If you're getting into the first or second burst with the Fibonacci, and you can really tell. Sometimes you can really tell, like it gives you a clear, like off the like the 38.2% or the 50%. And, the retracement, and you can use these. You can use those lines as profit targets.
I'm going to geek out for a minute, talk a little bit about Fibonacci. Fibonacci is it's a golden sequence, okay? Mm-hmm. And the bottom line is it's the most repeated pattern in nature. Flowers grow, butterflies,
100%.
Everything follows. It's a natural rhythm, and
even energy. The human body, it's wild.
The human body works in these patterns. Therefore, human beings have this embedded for millennia of these ratios. Like it's just, you see it without even knowing it, looking at a rose, looking at an animal print, looking in, it's in our DNA, right? This repeating mechanism, these ratios. Therefore, that's why it fulfills. So when you see it and you can use it as a part of your data, you can't go wrong with it. When it doesn't fulfill, that means, hey, doesn't mean don't take the trade. That's why I have multiple pieces of data on here. The goal is to stack as much of this data up. Yes, 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 yes. All these things are happening in context, right? Remember, what we're creating is a giant frame to keep your probability, or to build your probability. Trades start off 50-50. That means you're winning or you're losing. It's a coin toss, right? Mm-hmm. When you figure out each one of these lines and each one of these pieces of data, it increases to 55, to 65, to 75, to 85, until you're like, okay, I'm 99% sure I'm not losing money on this trade because this context is so amazing, right? That's the goal with this trading plan.
Sounds like it's fucking destiny. Yo, but seriously, if you guys don't know how to use Fibonacci, or you don't know much about it, there's plenty of places to look at. YouTube has some great videos on it that's pretty easily self-explanatory. I highly recommend that you take a look at it just to know it. So did the levels retrace? Yeah, we went over that. So Fibonacci intersect with the moving averages.
I love that. That's my telltale right there.
Right there. If it's bouncing off one of the moving averages right on there, and or it's like coming through and it's giving you like that'll give you that nice single bottom and that double bottom pattern right off there, and that's I love when that happens, because you know for a fact where it's going, and that is money right there.
Totally.
RSI confirmation. Do we have sharp reversals with the, with our relative strength index? Are we looking at like which way is it going, where is it going, and how fast is it going to go? If we see some type of sharp reversal, we know where it's going.
And let me just tell you, a lot of people fall into this trap with indicators. Try to trade by indicators. Okay.
Oh, yeah.
Indicators are very, very complex mathematical equations. Okay. If you can't sit down and actually go through the equation and understand it, you're probably not going to trade it right. So the best thing to do is trade it from a contrarian standpoint. Is I need this indicator to, I call it short circuiting, but what I need this indicator to do is be behaving so erratically and be so radical that I know I'm at an extreme in the market and something's going to happen. Okay.
I like that short circuit. I think that's what we should call it from now on.
And the deal is when an indicator is set to 14 or 21 periods, right? Just like moving averages. When an indicator is set to 14 periods, it's measuring the data from 14 bars. So if it's just humming along, but all of a sudden it drops like crazy, it's like, wait, one bar just made this do this? You know what I mean? And it's like, holy cow. Okay, pay attention to that, right? Mm-hmm. Yeah, it's just like these little red flags.
Yeah, man, absolutely.
Hey, I'm getting ready to do this.
Yeah, I love when I like that with short circuit and it behaves erratically. When it does that, that's your giveaway. That's a good way to frame it. This part is the next extremely important part. I feel like probably one of the most important in step 2 is the timing of this.
100%.
When is this happening? Is it happening between the Tokyo and London torch pass or the London New York torch pass? Because most of the time, and I can tell you from experience of doing this professionally, most of the time, these patterns will happen right as the London or New York market opens, or it will happen like 1 to 2 hours right after the market's open. Sometimes it needs a little bit to set up the pattern, or you'll see it like Tokyo and London will just start to form that pattern, the double top, double bottom, and it'll just rock it right from there the second it opens. But you gotta, it doesn't matter what time it does happen, you still gotta extrapolate the data. You have to make sure you're stacking all of this. But most of the time it will happen between London and New York or London and New York have the most volume in the market.
So, the other part to this is markets are open 24 hours a day. So you have 3 distinct time frames in 3 distinct 8-hour periods of banking, right? Institutional trading. That dictates a lot because institutions trade about 96% of the volume. Retail traders don't. We're just a drop in the bucket, right?
Yeah, right. We're like 5% of the world's money. And,
yeah. And this is the whole thing is like following a trading plan that aligns with fundamental and technical and takes the institutional data into account. That's what we're going for here. But knowing this cycle, if you can come in and look and see, well, Tokyo was a compression, or if Tokyo ran 100 pips, you're probably just going to be at the high or low of day and get like a crap reversal into the moving averages. Like pattern, right?
Absolutely. Yeah. I hate when Tokyo takes it.
Yeah. Right.
I'm just like, come on.
Well, see, me personally, one of my favorite, because I trade a lot more in New York, when I live in Europe, I trade a lot of London, but when I'm in America, I bounce around, but mostly it's New York. But what I like is, whoa, man, Tokyo ran like crazy and London does a nice, and then it jams down right before the U.S. session. It does a 50% retrace, hits the moving averages, and I get a second move. So I don't mind it. I'm just like, hey, man, if the data's there, I'm in, right?
100%, man, 100%. Last step of step 2, or last part of step 2 is, was the pattern or the setup within 15 minutes of the high impact news or the red news that you're going to see on forexfactory.com. Was it, is this move coming from red news, or is it within 15 minutes or 15 minutes before or after the news is happening? So
you know what we'll do
next
week? We'll do the 5 frames of red news because there's choices, right?
Yes, that's a good idea.
One of 5 events happens with red news. So you have a 20%, this has happened, 20%. Once you start thinking in those frames, you can identify what the red news did and trade it,
Yes, absolutely. I actually, most of the time I do trade. I'm actually in the trade when the red news is happening. If I know it's already continuing a pattern, I know it does. I will tell you.
When did you get, what was your biggest burn doing that?
Biggest burn doing that's one. All right. So I was in a gold trade, right?
Yep.
And
I know it.
Now I know better. All right. But so the pattern's like riding, it's like hanging on to the 200 moving average, right? On the 15-minute chart. And it's hanging on there. It's just like kind of like looks like Christmas lights, like restringing itself. And I know it's going to come down. But there's red news at 8:30 a.m. Eastern Standard Time, right? The second the clock strikes 8:30, dude, it flashes the price up like 100 fucking pips and comes right back down, dude. And I'm like, I got smoked because I had a like a stop loss. It was like 20 or 40 pips. I got smoked for 80. So
and there it is.
Yeah,
that's kids. That's why we don't trade red news.
Yes. So
because Kyle, you're a really seasoned trader, so you trade it, you take the risk, but you also, most people, like, it's very difficult to stand up and dust yourself off after that kind of a loss.
I would have to say, if you had a choice, don't take the red news trade. Just stay out of it. Just stay out of it.
I've been trading 12 years. I don't take red news trades.
Yeah,
you don't need. There's plenty of moves without taking it. So.
Don't live dangerously. Don't live dangerously like me, because I make a lot of mistakes and but
discipline.
Exactly. All right. Step 3. Real quick, we're going to analyze the trade, entry, and management. Okay. So trade, entry, and management. So this is how you're going to get into the trade. So your entry candle, so you're going to identify a special candle, and it's going to throw a shift. What we call it is a shift bar. We're going to call it a candle basically that's more than 8 pips. On I would say on the 15-minute chart, You could probably do it if you see it like a 10 pip candle in the 5-minute chart, but stick to the 15.
Yeah, don't go
starting out. So if you got a trade that's or a candle that's more than 8 pips, that is your confirmation candle. You're always next part of this. You're almost always going to get a pullback right
Pretty
after
much.
that. So which gives us a chance to have 2 separate entries on this trade if you've got a nice setup. So you can enter right when the 15-minute candle closes, and then you can catch it again on the pullback of that next 15-minute candle and get you a better price. It almost most of the time it won't exceed where your stop loss is as long as you've got a healthy stop loss. Try to keep it between 10 and 15 pips above the that 15-minute candle that closed. I would have to say that'll keep you in a safe area out of the way.
Or you do moderate, or you do conservative. You go above the candle. So I go right at the body of the shift bar, the confirmation bar.
My stop loss is like 5 pips now, man. I keep that tight.
I like a nice tight stop loss.
Yeah, but keep a conservative or moderate stop loss when you're starting out. I highly recommend that. All right, and lastly, identify your exit candle. What does this look like? Your indicator is going to give you a lot. It's going to give you a lot of data on this, and it's going to show you when this is happening. Like if you're using the TDI or your Bollinger Bands compressing on the 15-minute chart or the 5-minute chart, that's when it's time. Like, okay, it's probably going to start to turn around, and you're going to lose most of your profit if you don't get up. Or my advice is pick a moderate target profit for pips. Pick between 20, 25. But yes, look to the left.
Look for your previous high or your previous low if you're shorting, and be like, okay, you know what? We're probably heading back down there to retest this. Okay. Mm-hmm. Another thing is, so you got on here or takes out the 5 moving average, right? Because if you got a big bar that's going to take out the previous 5 bars of pattern, if it's going long, and you got a big short bar and it's closing below, not wicking, but actually closing, that's a pretty good indication something's not going right if we're wiping out 5 different bars before you. Now, that being said, this is one where you can go back to that timing in part 2, where we talked Tokyo into London, London into New York. I can tell you right now, you can go look today. If the Euro Yen chart, for example, it was shorting like crazy right when that New York torch pass opened. There was a giant bar against it.
Oh yeah.
Watch your timing. Book your profit if you're trading like these, smaller time frames, 15-minute time frames, because you're going to have to sit through that giant New York, pattern or setup or whatever. And it's just a beast, man. It'll just tear your heart out if you're up 30 pips and you go down to almost 10 pips now.
Oh man, that's the worst. Sitting in the trade and not booking your profits and sitting in the trade too long is just another mistake that I've made. I've made them all, guys. Made them all. All right.
We all make the same identical mistakes. We all have. I'm going to sit in this trade. I'm going to make all my pips today. We all have that, and we ignore it. That's why we have to follow a checklist, because that eliminates your ego from making the decisions, and it gives you facts and data. Right.
Exactly.
I'll close with this, and I'll let you wrap up.
Yeah.
No one piece of data on that checklist should instigate you to enter a trade. It is a symphony, right? You need context. You need full context from knowing what's happening on high time frames, from understanding the technicals, from getting the setups and getting the patterns down cold, right? That's what this whole thing, this education is about, is mastering each single line on that. So you understand it like a ninja, and you're like, okay, I see that. If you don't see it and you're stumbling, practice. You got to see it consistently. Practice makes perfect, right? We talk about, do some homework, do some exercises, back test each thing. Well, people like, if I can't, if you can't see it backwards, you're never going to see it forward, right? So
100%, man.
Just work it,
girl. Yeah, no, that's I couldn't have said it better myself. So we will close with that. We'll wrap it up there. But guys, please like and subscribe to the YouTube channel. And if you're listening on Spotify, please follow us so you don't miss an episode. And please give us a rating to the show if you're an avid listener, to help us get this in front of more people.
Hey, what's your email?
Oh yeah, my email. If you guys want to email me, if you have any questions about the trading checklist, you can get me at Kyle@travelingtraderpro.com. You can follow me on Instagram at That's Mr. Doherty to you. You can send me a DM there if you want. And if you do want a free strategy session with me, you can you can book a strategy session with me at travelingtraderpro.com and transformmytrading.com. But until next time, see everyone later.
Take care.